Welcome to this week's edition of Two Trades in 2 Minutes. Hi, I'm Ross Givens, a trader of more than 20 years, and every Tuesday I put out a video trying to share with you two low-risk, high-probability setups in the stock market that you can take right now. And today, for our regular viewers, I'm going to do something a little bit different because last week was our 10th week of this segment. So for the last 10 weeks straight, I've been giving you two trade setups that I believe would generate a profit in the coming weeks. And I thought, hey, with anything you do for a while, you need to go back and review your results. So what I want to do is go back over the last 10 weeks, show the setups we've recommended. We'll see how they've done. And then I'm also going to share with you two brand new trades you can take right now. So we started this on July the 22nd with this trade, IONQ, a leading stock in the quantum computing space. Recommended buying low in the base in this little breakout here. We were a bit early. If you bought there, you kind of sat without a whole lot of movement for a couple of weeks. You could have also bought the breakout, which we called would be above this $49 level. And if you did so and followed through, it was a great move. IONQ came out, shot up 53% in a week and a half, and even with the pullback, you're up about 25%. At the same time, we put in Cipher, CIFR, a crypto mining company. And this one, again, we're a bit early to the party. It did pull back and retest this low breakout area there, but man, this sucker has ripped and is more than doubled from that call we made back in July. At the same time, I gave you a bonus, which is KGC, Kinross Gold. Gold been very strong, breaking out of a clean pattern. Came out right here at about $16. If you followed along, you are 55% richer than you were at that time. Now, the next week, we did SolarEdge, ticker SEDG, a solar stock. As you can see, it was coming out of this big stage one base down here through late 24 and 25. Bought the retest right here at about $25. Paid off pretty well. You were currently up 46% in just 2 months on that trade. Now, the next month, I also at this time recommended Coinbase when seeing some strength in the crypto space. Thought this was a nice little entry for a pullback. Turned out I was wrong. You're going to get some of these wrong. If you bought it here, you got stopped out in just a couple of days for a small 8 to 10% loss. So, hey, we're not going to get them all right. But we got to take the good with the bad. Next week, we did FBIN, again on a move through here. Didn't really turn into much, went up 6 or 7%, ended up rolling over. That one's going to be a small 7% loss. Also did Denison Mines at that time, right in here on the pullback, and that 7% loss was coupled with a 36% gain. So I'm going to go ahead and call the August 5 week a net win. Now, on August 12th, I focused on ETFs, exchange-traded funds. These are baskets of stocks. They trade like a single ticker, but it'll give you exposure to a whole sector, a whole area. And the two that were firming up that we recommended were ITB, which is the home construction sector. It was breaking out of this low-term base. It did rally about 13%, which is good for an ETF. It has pulled back a little bit. So you're not up a ton of money in here. The home building move began to take place as rate cuts came in at only a quarter point instead of half. The market has kind of soured on that. So up a little, hasn't been a big winner, but the other ETF I gave you was something I'm very bullish on right now, which is gold, GLD. You saw this big base forming here, and it's kind of May, June, July. Told you we were expecting a breakout coming in here, so go ahead and preload the gun on gold, and if you did, you've enjoyed this beautiful rally here as gold price have accelerated by a little over 15%, okay? Now, the next month went to construction stocks. Again, we were going into the Fed meeting, thought we'd see some movement here, and we have. One was Sterling Infrastructure. We bought in this little pullback, shot up about 38% in 5 weeks. It has pulled back a little, but you're still up 25% over a month and a half. I'm going to count that as a W. At the same time, USLM, entry at 115. Again, in a pullback here, retested a base. That one is up 16% of the same period. So, boom, 2 for 2 that week. Now, the next week, EXP, a building material stock. Now, this one is not played out. We saw it basing in here. Thought we'd get a breakout through 240. So far, that has not happened. It hasn't run. It also hasn't hit our stop. So if you took this one, you're down 3%. Hasn't gone anywhere. I just exit this one, take the small loss, move on. At the same time, we did SHLS, Scholes, similar stock in the same sector. Really nice, clean move here, breaking through the highs. Recommended a buy here on that stock. It is currently about 15%. So that one's done all right, okay? Now, September the 2nd, two stocks in the metals sector. One was Alcoa, AA, Hasn't done much, little low entry. You're up 7%, nothing to write home about. We also did a new entry on GLD, this time September the 2nd, which was right here. So that was really a perfect entry. Right there as it's accelerating through on that Tuesday, September the 2nd. So you caught a beautiful move up in GLT. On the 9th, recommended QBTS. This one has been an absolute monster. Now here was the buy point. It moved above 16.5. Risk was minimal at just about 10%. It shot up 77% in 13 days. It has pulled back a bit, currently up 46%. In last week's video, when it was here, I told you I would sell half, 2/3, or all of us there. Hopefully you locked in some gains, but even if you didn't, you got a really nice big win. At the same time, I recommended LEU, which is a nuclear stock. Quantum and nuclear, been leading group, coming out. Beautiful entry there. Never went a penny against you, and you are currently sitting up 44% in 3 weeks. So this stuff is paying. I hope y'all are paying attention. September the 16th, got two more. I'm going to the new stocks. September the 16th, got into platinum, the ETF for platinum PLTM. PLTM at about 13.5. That accelerated as expected. Platinum prices are 13% higher in 2 weeks, which is a big move in the metals. Also QUBT at 1670, and bada boom, bada bang. That sucker went up 40% in 6 days, is pulling back and weakening. I'd probably get out of this one since it hadn't followed through, but you're going to get out at a 12% gain, so nothing to write me hate mail about. And then last week, on September the 30th, recommended ALB, Albemarle, for the play on lithium. It is getting dumped today. I would exit this one. It was doing nicely, running. It's back to our entry, maybe down 1% or 2%. Albemarle does not seem to have the goods. I'd take that at a break even or tiny little loss. The other one recommended CCJ. Coming through here, it broke out. A little retest. Still working. It's right in there. We recommended it. I think you will see CCJ accelerate higher. Okay, so I didn't do the exact numbers, but I did see more wins than losses. I did see bigger gains than I saw the small percentage losses. So if you've been following these, do me a favor. I am talking into the screen. I don't get to meet you guys in person. Let me know in the comments if you've taken these, if you've made money. Let me know. It just makes me feel good, okay? So let me know in the comments. Now, let's look forward to tomorrow and look at 2 new trades we can do in 2 minutes, all right? Now, so far, I am 0 for 10 on getting this done in under 2 minutes. But I got a good feeling today, so let's go ahead and bang it out. All right, number 1, and I can't even believe I'm recommending this, is Nvidia, NVDA. Now, Nvidia has been the market leader of the last 2.5 years. It has come from consolidation, breakout. And the reason I'm okay with this, it finally did roll over here at the tariff situation, lost 44% of its value, and it's just ricocheted back higher. But as you can see, it is now shallowing up, tightening, breaking out to new highs. I don't generally recommend companies that are worth $4.5 trillion. It's a little long in the tooth, but hey, I'm going to follow what I see in the market. It looks like a breakout here. I think you can buy Nvidia. The days of 500% moves are over, but you can get in this thing. I'd put a stop loss here at 173.25, risk about 7%, see if you can make 20-30% on the upside over the next couple of months. Another stock I like here, MP. Now, this is MP Materials. It's a rare earth stock, and the rare earth minerals are really hot right now. Big war between China and the U.S. trying to get a hold of these. They've done some big deals, the DOD, it's for the big tech companies. I've drawn what I think this thing is going to do, okay? I've been wrong before, but our track record's decent, and we typically see this kind of shallowing pattern as these stocks come in and absorb supply and get ready for a breakout higher. So this thing's already up there pretty good. The company currently worth $11.7 billion. So I'm going to try to cheat you into this thing. I think you can buy it here, low in the base. Right, so I've drawn out what I think it's going to do. We're going to kind of pick it up here. We're cheating an entry, but the beauty of doing this is we can put a stop loss about 8%, 9% below. So call it 60.5. Work a stop loss order right in here. Don't need to risk a lot of money. And as long as this thing is still in play, it should push up, form, and when it breaks out, ideally, it breaks out. You've already got a 20 or 25% profit. You're adding on to that on the way higher. Boom! 2 trades in 2 minutes. Finally got it done with 5 seconds to spare. In celebration, let me give you a bonus. All right, one more stock I like. AG, First Majestic Silver. Unless you've been living under a rock, you have seen silver has been on a tear $46 an ounce. This is the first time we've been there in 45 years. I'm sorry, I did it here in 2011, but still, we've got resistance from the 1980s to the Hunt Brothers run. It peaked there in 2010. This bad boy is finally coming back, what I think is an early stage super cycle in silver, and this thing ain't going to stop at 46, 48 this time. I think we're going to see $150, $200 an ounce in silver. In fact, I am so confident in that, I just got this in the mail, which is a 100-ounce bar of silver. I'm going to buy more of them, but they get kind of harder to store. Gold's a little bit easier. It's only 6 pounds. I need to get back in the gym. So anyway, the stock we're looking at, AG, is a big silver miner, First Majestic Silver Corp. And while we don't have a perfect breakout pattern, we had kind of this shallowing base here, the big move up, it comes in, it tightens, and it kind of explodes here. But we have seen some nice recovery. So stocks will do what we call a natural reaction. It will break out, come back, and you want to see it accelerate higher. And we are seeing that. And even if we look at this morning's action where the stock gapped down, look at this on a 5-minute chart. So this stock this morning, gaps down, meaning it closed on Monday here, opened up here, and just boom, they bought this bad boy up. Surged it from like 11.80 to 12 and a quarter in the first 5 minutes of trading. So to me, this shows that this stock is actively being accumulated. Big institutional buyers are taking advantage of these dips and gap downs to get more. It is putting in these reactions and accelerating back higher. I think it's on the move up. You pick up some stock here, put a stop below the little swing low where it's been rejected over the last week. So stop at about 11 and a quarter. You had an 8% risk, and you're going to ride that gravy train in the silver market with First Majestic Silver. So that's it. 2 trades in 2 minutes, plus a bonus, plus a 10-week review. It's a lot. Hopefully I didn't bore you, but I just wanted to be accountable, show you where you're at. And if you've not already, so help me, hit that subscribe button down there in the corner. That way these videos will show up in your feed every Tuesday, along with the other content we put out, including stock picks and strategy and pretty much anything I think can make you wealthier and wiser in the investment space.